Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your financial market update for this Thursday, the 1st of June, 2017, just after 4:10 p.m. Central Daylight Time. Well, once the stock market got itself rolling today, it just didn't stop. It really didn't matter that the bonds and notes were down slightly. It didn't seem to matter to the market that the jobs data tomorrow report is tomorrow. And I think that's because the market's pretty well built in the idea that the Fed's going to move in June, but the data is such right now that if jobs look better, maybe that makes the economy better. It still doesn't mean there'll be a September or December hike. The market has that in its head, but with the data being as weak as it's been, maybe the market has flipped to the point where it says, you know, give me good data. It means the economy's getting back on track. How's that for a twist on things? The other thing that happened in the marketplace is President Trump pulled us, America, out of the Paris Climate Accord. He gave his reasons, and they're very, very solid. Did you realize we're the people paying and nobody else is paying? Did you realize when you hear about all this that China can keep polluting 13 more years? We pay for all this cleaning, and then they have to start doing what they're doing. So what the president said, in essence, was, hey, let's renegotiate. I'm not saying we're not interested, but the way this is set up isn't very much in our favor, so we're going to back out of it. You'll hear tonight calls that it was the worst thing that ever happened to mankind. He's going to destroy the world. I don't think that's quite it. But remember, if this man wakes up on the left side of bed or the right side, everybody hears a leak, and then they say, oh, you realize what he's done? He's got out of the wrong side of bed. Hate to say it, but it's true. I mean, every day we see that. Metal markets, they broke them hard initially, and they all came back. Not sure if that has too much to do with anything other than market getting itself ready for tomorrow's jobs data. We saw a pullback in the euro, the pound, the yen at the expense of the dollar coming up today. The higher dollar weighed a little bit, I think, on the energies. They were all over the board today, but couldn't really mount anything. And in the nat gas, the market's down again. They saw another big build in nat gas stocks, but so what? We haven't had warm weather yet. We all know that, so we'll have to see what goes on. I look at it that the stock market got fairly excited that energy prices are stable, and maybe I'm the one that's looking at it wrong. But when you look at the rally now, today you go up to a new all-time high, 24.3050, and you can see how this market just running to the upside. The S&P, if you take a look where we finished, 24.2960, a new all-time high close there. Look at how this market has come back. So I know some traders that wrote on the website, you know, maybe we have an inverted head and shoulder formation here. Well, it's not exactly the formation I'd call it, but I can see what they're saying. And if it is, in their opinion, that, well, the market's breaking out. To me, it looks just like an extenuation rally, and I say that because you were trying up until today to get this. You were trying to build on lower highs, lower lows. Admittedly, the market is under key averages, and today, once you cleared this high, well, if you're short, what are you going to say? Where's your next point? You're just looking for resistance above the market to prove you're right. You're not with the trend. You're at an all-time high close. Now, let me explain what this also means. It means that for every long in the futures market, there's a short. Everyone short tonight, other than those that sold between 24.3050 and the settlement of 24.2690. So that means for 80 cents from 24.3050 to 24.2970, those people are the only profits in the market. Everybody else has a loss, unless I guess some people might have sold at 24.2960 and they're even. But that's the point. The market has stayed this route over the 18-day average. It keeps its upside bias. It stopped again, and you have to admit Bollinger Bands are an interesting tool. literally against them and closed right under them. And you have the embedded reading, and that's what I care about. This is, in my hierarchy of technical tools, the strongest of them all. When a market's embedded, even though it pulls back, it is saying that there are willing buyers until that red line closes back under 80, and that's exactly what the market is doing. It's acting in that exact manner. Embedded reading in the NASDAQ, the poster child of the bull market. And again, up and away you go now. Today's high was 58.24, not anywhere near the upper Bollinger Band of 58.37, just cranking out higher and higher highs. The Dow, embedded reading, so away you go to the upside. Now, the market that was the weak sister was the Russell. And I think the pros this morning sold this market right into that area. Some might have elected to come out and say, you know something, if you clear this 382.70, you're going to go up. That's 1382.70. That's what I was trying to say. And it's exactly what occurred. So the next stopping zone, if the market wants to carry, is where? The upper Bollinger Band. The downtrend is over, and it ended in that flurry yesterday down to the Bollinger Band. You may see one of these situations where you go from lower Bollinger Band to upper Bollinger Band, all in a basically a 48-hour period, and it wouldn't surprise me, because those that were short now they're getting nervous. Only the people back here are really having any profits left. If we take a look at the VIX, it's starting to break down again. It's got an embedded reading. If it wants to drop, it can get down here. Now, you realize if this market gets under this area, it's going to be saying that traders are just throwing caution to the wind. They don't feel that this market's backing off. And I was asked about that yesterday on Fox News as I did my interview. Are traders, do they feel nervous about these markets? And if you watched my interview with Liz Klayman, I said no. I said, why? Every time it breaks, the market comes back in the stock market. And now, with Congress getting ready to go away, what's to throw it off kilter? And I think that's where you're at. Now, yes, tomorrow we have to be nervous about jobs data. It's a 20-minute affair. And after that, the market will be where it's at. So be aware of that. You have an embedded reading, which means until that's lost, the pullbacks in the market are buying opportunities going into it. So the market's got an interesting setup here, because it is saying that even if the data is good and the market initially drops, that rates look like they're still going to drop. It's opposite of the Fed, and I believe the futures market is better than the Fed in every day figuring out what rates are doing. The Fed's great long term because they have the money and they can drive the market where they want it. But short term, after the initial numbers are out, well, it's going to be about the marketplace. And as you can see, you're just overbought in the 10-year up here, but you're still very much in an uptrend. Now the dollar. An inside day with an embedded reading. Lose the embedded reading, I can argue you're going back to the 18-day average. Don't lose the embedded reading, I can make an argument you're going down to the lower Bollinger Band. I wish I could tell you how it'll react to the jobs data tomorrow. I can't. At the same time, in the euro currency, if we take a look, the last rally high here, and I have to fix this chart. If I come back here, what's this number? 112.62.5. Then the market rallies today to 112.65.5. You've now got a pattern, and I didn't catch that. I should have this arrow pointing up for you. You got a higher high and lower low. Did you keep the fully embedded reading? Yes. So these breaks, don't lose that reading. If the market starts moving up from this area again, watch out. You might be headed to that upper Bollinger Band. A lot of trades tomorrow are going to be dependent on what these slow stochastics, when the momentum ties into a big trend, do they give it up or do they keep it? In the British pound, flat momentum in the market. You have a pattern of a lower, now you got a higher high and a lower low. I don't know what to do with the trend. There is none. You're just sort of sitting here. Now, why is it sitting? It's sitting because the polls have closed in so much in London. And what's taking place is Mr. Corbyn's party or Ms. May's party, which one's going to be the right one, conservatives or laborers? And that's going to be the big problem. And I got a good lesson today from one of you watching. Yeah, the old Tory party's the conservative party. I always get confused with all that. And that's how it's working. And obviously the market wants to see Ms. May, who's in power, be able to keep power. But if she loses enough seats, there's nothing worse than a prime minister going into a huge negotiation that doesn't have parliament behind her. It's a pretty rough deal. As we take a look at the June Japanese yen, the market's got a higher high, a lower low. Notice that we're right getting close to a crossover. Is it going to be where the market turns back here and turns down in the moving average, or is it going to get over the 100-day average and give you a bullish crossover, meaning this market might rally higher? That could be if, and it wouldn't surprise me if you're up, if the election on the 8th turns out that Ms. May loses an awful lot of seats, and the yen often is one of these markets people run to as safety hedge when they don't know what to do. In the crude oil market, even though we had good numbers out of the API, you didn't go anywhere today. Now, in all fairness, you're oversold as can be. You got a 27 reading and the other number's 50. Very difficult to get that. Short down here, where's the market fighting the battle? For those of you that are new here, if you watch the 18-day average of closes, this red line, I call it the line in the sand. Market fell back to it, and from 1, 2, just missed it that day. Today you got to it. So out of the past 5 days, you've hit it 4 times. The market is looking to see what does it do next from there. In the gasoline market, the market closed over the 18-day average but kept the swing line down, and again, it's fighting right at that number. Momentum was overbought. It's out of that condition, but it's still pointing down at this point. And in the nat gas, today's bill just killed the market, and look at how you've come down. Now, for those of us that live in the Midwest, yay, because when our gas companies are going to price gasoline, we want to see this down as much as we can get it so that we can keep our prices nice and where we think they should be. Other than that, I want to remind you all about consensus. Now, I have been a fan of consensus for many, many years. I'm not talking 10, I'm talking many years. And think of it this way. They get a list of market letters. Now, in the old days, to them it was a year ago. They've gone everything now electronic. They would send you out literally a newspaper with everybody's commentary in it. Think of all those newsletters. Now it's online. It's the simplest thing to read. Look at all these different firms. And I'm talking it's all the big names. They're in here as to who writes, who their staff writes for. It all comes in and through here. And then they take those letters and they create a bullish sentiment index. So you get to see market by market, are the newsletters bullish or bearish. That sentiment index comes out on Tuesdays. They want you to get a 4-week trial so you can read everything. You're going to get a user ID and a password. It's going to let you right into the website. It's got a big value to it. And I'm telling you, this is good reading if you're looking to see what other traders have. There'll be charts in there, all kinds of interesting analysis. I read it for different ideas, see what sometimes the traders are doing. I look forward to seeing the consensus. Sometimes I want to be with the consensus. Sometimes I'm thinking it's overdone in consensus. So there's different ways that you look at all this and you get an idea as to what the different markets are doing. Call us. Go to our website. You can sign up for this right there. You'll see a carousel of free offers on our webpage. Click up here if you're watching me on YouTube, or underneath us on any of the websites that are carrying this video. They typically put under us, click here for your free offers. Just click it. The forms will appear. We'll get it out to you. I'm Ira Epstein. You have a good day.